Okay, guys, Bill Soriano here from Pittsburgh, and it's Sunday morning, so it's time to do our weekly outlook chart markups, whatever you want to call it. It's a weekly outlook forecast for the week here of July 31st, which actually starts tonight at 5 p.m. Eastern time with the forex marketing opening in the Australian market opening. So, basically, as you know, what we do on this here, I post this here on my YouTube channel and then also in my Forex Smart Money Trading Academy group. Right here, you could see yesterday I posted the trade recap for the week of 7/24/23. Last week, we had 3 wins, 3 losses, and a 3% gain on our trading account had you taken all 6 trades. For the month of July, we're currently at 20 wins, 12 losses, a 28% gain on our trading account, assuming that you would have been able to take all 32 trades. Okay, so I will post that spreadsheet, I guess, tomorrow night or Tuesday, sometime next week after all of the July trades close. So obviously there could be trades happen tonight, trades happen tomorrow on Monday. And then once those trades close and we get a result, a win or a loss, then I'll be able to post that spreadsheet for you right here in the group. And I'll do that every month. And again, this is the smart money strategy that I teach for free here on my YouTube channel and in my group, Forex Smart Money Trading Academy group. Now, if you want, this is just one strategy. If you want access to all the strategies that we have in our community and our proprietary indicators, and you have to join our community, right, to get that. But you get this training from me every week for free in the group. I do a video on Saturday, like I did yesterday, doing a recap for the week, showing the wins and losses. And then on Sunday, I do a new weekly overview forecast for next week, where basically what we do on this video is we go through all 28 pairs, we identify the daily trend, we identify a 4-hour order block to trade from with that daily trend, and then we identify a 4-hour point of interest inside of that 4-hour order block, and we set our alert there, and we wait for price to hit our alert during the week, right? I show you how to use a free indicator on this video to help you identify these order blocks. If you're new to trading, if you don't need it, don't worry, don't use it. You can mark up your own. If you're not going to mark up your own, that's fine. This indicator does work about 80. I find it works about 80% of the time. About 20% of the time, though, I have to use a different order block other than what the indicator has marked up for us. These order blocks must meet 3 criteria. They must lead to a break of structure. There must be an engulfing candle, either right after or the next candle after the banker candle or institutional candle that we're using, and it must cause imbalance. The order block must not have been mitigated or touched before after a break of structure occurred. And when the 4-hour point of interest alert goes off, we then drop down to the 15-minute chart, wait for our entry model. And the only entry model that we're using for this strategy right now is the lower time frame flip. That's where, and I go over that during the week as the alerts get hit, right? You'll see me mark up the charts, and I'll usually do one video probably during the week sometime, just showing you some of the trades in action. I wasn't able to do that last week, but I did mark up the charts of all 6 trades here. Like I said, 3 winners and 3 losers. So all those charts are here. But basically, once that alert gets hit, we then identify where our break of structure needs to happen to give us our choke or our change of character. And then that enables us to identify our lower time frame flip zone, which is basically the 15-minute order block, right, that is created. So without further ado, let's get started here on this week's session. Now, again, if you don't understand what I was talking about when I went through this here, then you need to get access to my free 9-part Smart Money Concepts video series. So just drop me a message and I'll send you the link so you can register for that for free. You'll learn all about banker candles, break of structure, engulfing candles, imbalance, everything like that. You'll learn all about that in that video. Of course, you get 1 video a day for 9 days. Okay? And let's get started here so we can get through. We got to go through all the pairs here. So now we already obviously have the charts marked up from last week, and we have all of our flags on the pairs that were going off. But what we're going to do is we're going to come in and we're going to see if we need to change anything. Now, the first thing we do is look at the daily chart to identify what is the daily order flow. Okay, we could clearly see here that this order flow is down. We do plot some moving averages on here. Just sometimes this can help you if you're new to identify which way the actual trend bias is. You can see here the 200 day is the blue, the 62 is green, and the 13 is red. So they're showing us that the order flow is down, and you could tell just by looking at this that the order flow is down. So we have a order block here. If we go to the 4-hour chart, we do have an order block already set up there. We're going to put our smart money concepts indicator on at this point here, right? This is the free indicator that will help you identify order blocks. And of course, as you can see here now, since we've had a new break of structure, we do have a new order block right here that we could use. Now, me personally, I don't care for this order block because we don't have, what don't we have? We don't have an engulfing candle after this blue candle here. So the blue candle would be the banker or institutional candle. That's the last up candle before the down move. Yeah, that's the last up candle before this down move that causes a break of structure. It leaves imbalance, but we don't have an engulfing candle. Okay, so I am not too fond of this zone here. There's another zone right here where you have the same situation. You have no engulfing candle and you have no imbalance here as well. So I'm going to stick with my original markup from last week right here. Okay, and so that is our point of interest. And what happens is, you know, the other thing is this. We could, what I should say is the other thing is this. We could mark up this 4-hour candle, and then we can drop down to the 1 hour to see if there is a better candle inside of the 1 hour. And you can see here, it really doesn't get any better inside the 1 hour either. Okay, so we're just going to stay with the original markup that we have here on this one. So our point of interest alert is already set, right? That is this blue line right here inside of this till area. It doesn't look till right now because it has my till color plus this pink color that's showing up here. See if we highlight that, see that pink is just making it show up like that. Okay, AUDCHF, again, let's go to the daily chart. We're going to see that the order flow is definitely bearish on this. And let's see, we do have a couple other order blocks here. And again, we have the same situation. So right here, we do get an engulfing candle after this blue candle right here. This would be the last up candle before this down move that breaks structure. This is pretty close to where price is right now. So that kind of worries me. And so I'm kind of, the other thing is this area up here, I don't really like. But what we're going to do is, in this case here, we're going to remove our drawings from last week, and we're going to go ahead and use this area right here. So we'll mark up the whole order block as the indicator is giving it to us, because it really doesn't matter, because our point of interest, we're waiting for our point of interest to get hit right there. And again, we don't trade from these 4-hour points of interest. Some people do. So we can be a little more lenient when we mark up our order blocks. We have a little more flexibility in taking these decisional areas over these extreme areas, because we're going to wait for our confirmation on the 15-minute chart before we would take the trade. And that's our lower time frame flip entry confirmation. So we're going to mark this up right here. And we're going to move on here. AUD, JPY. right? We're going to remove, let's remove the drawings from last week, see what we're looking at here. On the daily chart, so on the daily chart, you have very bullish structure here. We have a couple moves down here. This really doesn't tell me anything at all because I'd be looking for a break of structure all the way down here before I would look to start taking this short. So we're going to stay with our bullish sentiment here. Let's look at that one more time. Yeah, we're definitely going to stay bullish. So the indicator wants to give us these bearish order blocks here, but we're not gonna take those. We're gonna come over here to see where we can find an order block over here that we can maybe trade from, right? So we do have a good engulfing candle. We have some imbalance down here. So we have this. We're going to kind of put these two candles together for our zone, and then we're going to put our alert at the open of this candle right here. So we're going to look for price to come down to here, and then we're going to be looking to buy once that happens. AUD, I think this was a winning trade from last week, but I'm just going to remove these drawings here so we can get a fresh start here on the daily. All right, so the daily, you know, this one's a little bit harder to determine, right? Overall, it looks like the trend is down, right? We do try to make, we do make some moves up here, then it comes right back down again. So, you know, and it's just kind of consolidating right here. You can see this consolidation from this down move right here. So I'm going to stay bearish on this, right? And so on the 4 hour, these aren't valid order blocks for me because I don't consider this really a break of structure here. Although it is an internal break of structure. So I will actually take this banker candle right here. We also have this one up here, okay? So with this, I'm going to go up a little bit higher here. Again, I don't like the fact that there's not a real break of structure here. This area here has been hit several times. What I'd like to see happen here is I'd like to see price come down here and break structure. So what I'm going to do is, and you've seen me do this before, I'm going to set a break of structure alert here. So I'm not going to set a trading situation alert. This is a break of structure alert. So I'm going to wait. I really would like to see price come down to here, break this structure, and then that way I can identify a order block to trade from here. Because these order blocks to me, they're not valid because there's no break of structure here. I'm looking for a break of structure down to here. And this order block here has already been mitigated now twice. Okay. So I don't want to trade from this order block anymore. We're going to take these off here. Let's go to AUD USD, and on the daily, we're going to see, you know, we're going to see this looks a little bit different now. It's an uptrend, starts to move down, and then it consolidates. So again, to me, this is still bullish, you know. Although, you know, the moving averages are kind of right on top of each other here. And it looks like last week I had this bearish area marked up. But let's drop down to the 4 hour and see why I did that. See here, it looks like I like this area down here. And the fact is it's already been mitigated. So this price has already been hit. If we drop down to the 15-minute here, we can see that we're kind of waiting. We're kind of waiting. We could have a possible trade here because price has already hit our 4-hour point of interest. Let's just show you where the point of interest would be right there. So price came down, went right through that. But then it comes up and we got the break of structure right here. So now what we're waiting for, we would be waiting for price to come down here. And this is where we would look to take this trade. So you could see here, this is what I normally do during the week as the trade alerts go off, but this just has presented itself here. There's the choke right there, and the indicator is actually showing you a choke as well. And then down here, this would be our zone where we would want to take this trade. And you can see that the indicator is also giving you an order block down here as well. And it's going with this blue candle instead of the red one because it goes lower than the red one. But to me, the actual zone would be where this red candle opens. So that's where we would look to take our trade right there. So what I'm going to do is I'm going to put a blue star on here so that I know that this pair is already in a situation where a trade may take place. And that's what I do. I just, once the 4-hour points of interest get hit during the week, I then put a star, either a blue or red star, showing that I need to check that to see if the trade's going off. And then when a trade goes off, I usually give it a purple star. So we don't have to send any alerts here because we're ready to go there. So let's go to CAD, CHF here. We're going to get to the CAD pairs. And here, we're definitely in a bearish downtrend. As you can see, we have this 4-hour area marked up right here. And this area still looks good to me. I don't like this area here that the indicator is giving us because, again, in order for that area to be valid, I need this structure down here to be broken, and it wasn't. Okay, so we're going to stay with what we have here on this. We're going to stay with this alert up here. And I'm leaving these markups on here from last week because it just makes it faster for us to get through the charts here so that you're not stuck here for a longer period of time watching this video. Okay, so CAD-JPY, if we look on the daily chart, we're definitely bullish here. We have this order block that was marked up. It looks like it was hit. It does look like it was hit here. And this was one that I think just kind of took off on us, right? So now what we need is, if you look at the 15-minute chart here, this one came off, hit our point of interest, came up, and we have this trade marked up still down here. Okay, and the area that we're looking at is we're looking at this area right here for our lower time frame flip, because of course this big giant candle here, there's no engulfing candle after it because it's too big on its own there. This was a big down candle here. So we're not going to use that, obviously, to identify our lower time frame flip zone. We're going to use this candle right here, and that's where we have our trade kind of marked up right there at the open of that candle. So this one, we're going to put a blue flag by so that we know to continue waiting for that to come down. Okay, now the thing is, guys, at some point, and I haven't figured out what criteria I want to use for it, but at some point here, when this moves up here, you see here, when we get this break of structure, we got this choke. And I think what we did was, because these wicks, this was probably news, all these wicks here. So I think we used the body of these candles here for our choke, right? And so that would be kind of right here. We usually use the wicks, but because you get this news and you get these, we usually use the wicks because you have news here and you get these giant wicks to the upside. We can't count on them for our choke or a change of character. We have to count on the bodies in this case. And so we get that right here. Now, so you get your choke or your change of character, you mark up where you want to take your trade, but if price already moves up through your take profit zone here, then you have to kind of wonder, is it still safe to take that trade, or was the move already made and we just missed it? So that's kind of something I have to work on, and I'll continue to look at that this week, and I'll let you know during the week how that goes. CHFJPY, this one's obviously very, very bullish here. This one, it looks like this order block here was invalidated, right? Because we have a 4-hour candle going right through it. So we do have another order block down here, okay, which we can kind of use. The indicator is also giving it to us. Now it was hit, but then price jumped right away from it again. Okay, so your point of interest would have been right here. If we drop down to the 15-minute chart, right, we could see price came down, hit it, and you have the same situation you have in the CAD-JPY pair here, where you have all these big candles, these big wicks here, so you kind of have to use this for your break of structure. And then again, you have this candle right here that you would use to take your trade. They're giving us this zone right here, but again, we don't have an engulfing candle after this last down candle here. So I kind of like this area down here, but again, both of these trades are suspect because price already seems to have made its move. Let's just give that a blue flag, and we'll keep an eye on that this week to see what it does. EURAUD, we're going to be obviously bullish on this. It did make this 2x2 move down here, which basically changed the trend on this, right? So let me show you what I mean here. So you can see how price is moving up, right? And then right here, you get this break of structure. Price closes below that low of that wick right there. So that gives us a break of structure. You get a pullback, and then you get a second break of structure right here. And so that's a 2x2. And so the first break of structure is the choke or the change of character. And we use that in our lower time frame flip on the 15-minute time frame to take our trade. That's our entry model. But when you're looking at this on the higher time frame, you also use it to determine if the trend is about to change on you, because you could see it's very bullish, but you get this 2x2 now, which I call a choke plus. And that tells you at this point that the trend has now changed to bearish here. But then what happens is you get this move up. And so now you get this break of structure back to the upside. And so since the original trend was bullish, right, you did get the choke plus telling you that it was bearish to the downside, but now you get this move back up that breaks this structure to the upside. And so you have to kind of assume that we're still looking to take this long instead of short right now. Now, at this point right here, if we were at this point right here, right, if all this didn't happen and we came to the chart and looked at it right here, then we would say, oh, this is bearish. So we would want to mark up an order block on the 4-hour chart that was bearish, right? So we would probably want to find this order block right here to trade down from, okay? But because we have all this new information here, right, the move back up to break structure, we now know that this is going to be bearish for us for this week, or at least right now at this point, right? So let's go, I'm sorry, bullish. So we still have this order block right here. And it looks like it was hit twice and then price moved up, okay? So I don't want to trade from this order block anymore. I need a break of structure here, okay? So this is another situation where I have to set an alert for a break of structure. I need to get a break of structure. Let me get rid of these red candles here. To the upside here, right? So I'm going to, let me just do this. Let me remove all drawings first. I'm going to set a break of structure alert right there because I need, and this session's taking a little longer here because we're seeing a lot of things here that I usually go over during the week, where charts are already set up. But here we need to get a break of structure to the upside here so that we have clean areas to trade from down here. Right now, these areas aren't clean. They've already been hit twice. This is the original order block over here, and it's been hit once, twice, 3 times now. We don't want to trade from this order block anymore. We need a break of structure so that we can identify a new order block here to trade from that hasn't been mitigated or touched yet. You don't know what I mean by that again. You have to get with me. So I send you the link to register for my free 9-part Smart Money Concepts video series where we talk about all this stuff. The head guy in our community, he's been trading for over 20 years, Michael Martin. He's done those videos. They're not done by me. They're done by the experts in our community. So you're going to want to get that 9-part Smart Money Concepts video series from me. Just send me a message. I'll send you a link to register for that. Let's move on here to EURCAD. And again, when we look at this, we're going to see bullish price structure. The same thing that we've seen in EURAUD, right? We see this choke, this break of structure giving us a choke, a pullback, and our second break of structure, which is our choke plus, telling us it's bearish. But then we get the move back up, giving us bullish order flow again. Okay, now this area has already been hit here, right? So I'm going to be looking for price to move down to the next area here. And the next area it's given us is kind of down here. We have these smaller candles, but then we have this engulfing candle here, and we have lots of imbalance, okay? So we're going to draw the zone right there, and we're just going to put the thing right about in the middle of the zone in this case. And that's where we're going to wait for our alert to get hit at. So try to get rid of all this stuff here so we don't get confused by it. And there we go. And again, once you're done marking up all the charts here, then you just shut off this indicator here, and you're only left with your actual order block that you want to trade from. So once you mark up all the charts, you can then shut off the indicator so you don't get confused. EURCHF, again, if we go to the daily, we're going to see bearish order flow. We have some new break of structures here, so we should have maybe a new area to trade from, and we do. You see here, we have this candle, nice engulfing candle, lots of imbalance. So we're going to remove our drawings, and we're going to use this order block right here. It's giving us a bigger order block because it's using the red candle instead of the blue candle, right? But doesn't matter to us because we're going to put our alert at the open of the blue candle, right? So when you're looking at a buy situation, then the institutional or banker candle is always going to be the last down candle before the up move. When you're looking for a sell situation, it's going to be the last up candle before the down move. And that's this blue candle right here. Now that's usually the candle that you use to identify your order block as well. But since it's small, the indicator is grabbing this bigger candle right here. Okay, we're going to use that as the area, but again, the point of interest is always at the open of the institutional candle inside of that order block. And so that's where that's at. EURGBP. On the daily chart, we are bearish here, as you can see. Let's go to the 4-hour here. So again, we get these moves up. We do get a break of structure here to the downside. So looking here, we got this order block up here, which price has, you don't really have a break of structure prior to these wicks coming up and hitting this area. This area right here, I don't like, obviously. So we're going to use this zone right here. And we'll use the open of that candle as our point of interest. And again, you can see here that this wick here, after it comes down, we don't get a clean break of structure here. Right? Again, the indicator is telling us we have a choke there. But this is, why I say the indicator is only right about 80% of the time, because I need the body of this candle to close below this wick, not just the wick to come down. I need the body to close below the wick in order to get the choke. And I get that right here. Okay. But now after this point here, there are no wicks coming up mitigating this area. So to me, there's still liquidity here build up that they need to come and get. Okay. So we're going to wait for that to happen. And that is where our point of interest is at. EURJPY. So again, some trades went off in here. You could see this area was completely invalidated. So let's just remove the drawings here anyway. Let's look at the daily. What's the daily telling us? Again, the daily is bullish, right? We do get a break of structure or down to the downside right here, but we don't have that choke plus, right? We don't have a choke plus. So what's going on here? Oh, I don't have it on the daily chart. We don't have that choke plus. Let me just fix this 1 second here. See how the indicator gives us a choke. Now see, in this case, it's valid because the body of the candle closes below that wick, the low of that wick. But in the last chart, that didn't happen. So what happens is this indicator is just using wicks and wicks. It's using the wick to determine the area and the wick to determine if it breaks structure or not. I like that body to close. So you do get a choke or a change of character there. But in order to get a change of trend, you then need a pullback and a second break of structure. So you need a choke plus. That's what I call it, a choke plus. And all that is a break of structure that causes a choke or change of character, and then a second break of structure after it. And so this is still bullish, right? So if we go to the 4-hour, right, we're going to see that we don't have any break of structure, so I don't like these candles here. So we have to come all the way over to here. It's giving us a couple areas here, but it's also missing a couple areas. Like right here, we have a nice candle. We have a nice engulfing after it. And so I'm going to use this area right here. See that red candle there? And we're going to put our point of interest alert right at the open of that candle. Now the indicator is giving us some areas down below here because it's using volatility. It has some volatility built into it, and and that's why it's passing up this area here. It likes these areas down here better. But again, because we don't trade right off of these 4-hour points of interest, we can use this area here because we're going to wait for our confirmation on the 15-minute chart before we take the trade. We're going to wait for our entry model, which is lower time frame flip. Okay, so let's get rid of this thing here. And let's go to EURNZD. Okay, a lot of stuff going on here. Let's just remove the drawings here so we get a fresh take on it. And again, it's just bullish, right? it's bullish. We get this move down, gives us a change of character down here, but then it just moves right back up again. We do get a break of structure here, which is good because that should give us maybe, let's see here. So price comes down here, break structure to the upside. Okay, so we get this break of structure. We have this nice candle here. We have an engulfing candle after it. We have imbalance, right? So we are going to use the zone here that the indicator is giving us to buy from. And we're going to set our point of interest alert right at the open of that red candle there. And our alert set. Okay, so we're going to wait price to come down to there, and then we can take it up. Let's take the flag off. Let's go to EUR USD. Again, let's remove all of the drawings so that we get a fresh look at it. This again, very bullish. Okay, so bullish, and we have this area down here that was already hit, right? Already mitigated, already we acted off of this area here. So we're not going to want to use that area. We're going to come down here to this area like the indicator is giving us. And again, we have a candle here. We have an institutional candle, nice engulfing after it, and it does leave some imbalance. And we're just going to, there, the indicator is using that blue candle, so we're going to move that up like that. And there's our alert to trade EUR USD. If it comes down to here, again, we drop down to 15-minute, wait for our lower time frame flip entry model. So let's take the flag off of there. Let's get the GBP AUD. I feel like this session's running long here, so I'm going to try to speed things up. So again, very bullish price structure. Right, we do have this break of structure here, giving us an order block right here. And let's see. I like this one down here better, obviously because of the engulfing candle and the imbalance. So I'm going to use this one down here. This one here is probably just kind of something that sometimes the market makers and institutions will kind of try to move price action to trick people into taking this order block here. And it could work out good, don't get me wrong, but I'm going to come down to this one. And that's where our point of interest is going to be at. So I think the price is going to move through this order block and go all the way down to this one. I could, of course, be wrong. It could come all the way down to the next one as well. And then we even have one set up down here from before, right? So I'm going to try to get rid of that. So we don't use up the alerts there. And let's get to the next pair. GBP CAD, again, still bullish, very bullish. And comes down, you get a break of structure to the upside. This area has already kind of been mitigated. We're gonna leave our alert down here in this area that we have set up from last week. GBP CHF is okay. So we look at this. What do we see? We see bearish order flow, right? It tries to go bullish, but then again, just kind of consolidates in this area here. So we have a 4-hour area already marked up here, right here. And to me, that still looks like a good area to trade from. I'd like that red candle there to be a little bit bigger, but we're going to take it at this point because it looks like a good area to react from because you have this kind of little consolidation down below it too. And, you have imbalance here that needs to be filled. So it has reason to come up here. GBP JPY. Okay, let's get rid of these drawings from last week. Did we mark up a thing on that last pair? Yeah, we have it marked up right there. Okay. GBP, JPY, again, the daily is very bullish. You look at the 4-hour. So we're going to have to find an area over here. So look at this area here. Look at this nice area here. We have this big engulfing candle after this candle right here, and it leaves some imbalance right in here that the indicator is showing us. Now the point of interest is pretty far down there. See where it's at? So price has to move down pretty far into that order block there for us to get our alert to go off. UBP NZD, again, did we remove the drawings? Very bullish price structure on this. Again, we don't really get a clean break of structure here, so we don't want to trade from this area. This area here has already been mitigated once, but that is a break of structure there, however small. Don't like much of these areas here. So what I'm going to say is this is one where I'm going to look for a break of structure alert to go off. I'm going to put a alert up here, and this is going to be a break of structure alert. So when this alert goes off, guys, I know when I come to my chart and I look at this, I know that I'm not looking for a trade. I'm looking to identify my order block to trade from. Okay, GBP USD. Let's get rid of our drawings from last week here so we can look at this fresh. On the daily, we have bullish, very bullish price structure, right? On the 4-hour, we have this area here. The problem is I don't really see a nice engulfing candle in here. So if I just highlight this area, what I could do is I can drop down to the 1-hour to see if there's anything better inside the 1-hour. Sometimes we just do a little candle shopping inside the 1-hour to see if there's a better candle, right? So we're looking for the last down candle before this up move. And, we can't really find a good So kind of right here in the middle of this zone here, you can see this down candle before. It's not really a down move though. You know what I mean? It's kind of deceiving on you. So what we do is a lot of times when this happens, I'll just come back to the 4-hour. And if I like the zone, which I do like this zone, right? I do like this zone to trade from here. So what I'll do is I'll put my point of interest alert kind of right in the middle of this order block, kind of at the 50% point line, right? And so sometimes what you can do is you can take the channel tool here. Right? And the channel tool will automatically give you the 50% line. See? And so then you can take your horizontal line, put it right on there. It's a little bit hard to see, but you can then set your alert right there. And so we're setting our alert at the 50% point of that order block because we like the order block, but we really can't find a good institutional candle inside there to identify the point of interest, right? So it really doesn't meet all the valid criteria. The order block, we have the break of structure, we have the imbalance, but we can't find that engulfing candle after the institutional candle. But since we like the order block, and since we don't trade directly from that 4-hour point of interest, we can sometimes still use them. Okay, let's go to NZD CAD now. We're getting down to the NZD pairs here. Again, this price structure is bearish, right? It does make one change of character. You get a break of structure right on the daily chart here. See how it gives you that choke, but you don't have the second one. You don't have the choke plus. So we're still looking to sell this. And it looks like we had this order block here marked up, which is a nice order block. We have an alert set on it. This order block here, we really didn't get a nice engulfing candle, and it's already been hit, right? So we did get a break of structure to the downside. But again, this area here I don't like because we don't have the engulfing candle after this blue candle. So I'm going to stick with this order block up here. I'm going to wait. I think the price is eventually going to work its way up to here. It may, it may react a little bit off of this area here. But I think that the big reaction is going to wait till it goes up to there. And then that's when we're going to get our 2R move to the downside, right? NZDCHF on the daily, we're bearish order flow. Go back to the 4-hour. These areas here, this area we don't like. It's already been hit, right? We didn't get a second break of structure, so we can't identify another area inside of here yet. So we're going to stick with this area up here. Right? The problem is what? We don't have a lot of imbalance in there, right? There's a little bit of imbalance, not much. Okay, but we're going to wait for price to give us a confirmation on the 15-minute chart. So we're going to stay with that for now. NZD-JPY on the daily, we are bullish on the 4-hour. We have this area marked up down here that we're going to stick with, right? All right, so you can see here that we have this candle right here, that last down candle before the up move. You have a nice engulfing candle. It leaves some imbalance in there, right in there. So, that's what we have to stick with. NZD-USD on the daily chart. Look at that consolidation. So prior to the consolidation, we had bullish order flow. We got this move down, and then here we got the second move. So we got the choke plus telling us that it was bearish, but then what happened was price went ahead and broke structure to the upside, giving us that bullish bias right now in NZD-USD. This area right here looks like it was already hit, right? Kind of in that area right now. And it did not invalidate that area as of yet. So if we drop down to the 15-minute, we see here price comes down, hits it, goes lower. And what do we get right here? We get our choke. So we can actually look to place an order off of this order block down here. Okay. So we're going to give this a blue flag telling us that we already have a potential trade set up here for the week in NZD-USD. We don't have to wait for a point of interest to get hit. It's already been hit. And now we're going to get into the final three USD pairs here, and then we'll finish up here for this weekly forecast overview. Okay, here we have bearish order flow, right? So when we look at the 4-hour, let's get rid of all these drawings here. And yes, it's giving us this 4-hour area up here, which looks good to me. We have a nice engulfing candle after this candle with the imbalance. We're going to use the whole area that it's giving us because it doesn't really matter, because we're going to wait for price to hit this point of interest, which is the open of that candle right there. Okay, and there we go. And again, once we turn off our indicator, we're only left with our order block that we're trading from. So there's no confusion during the week. Right? USD chef on the daily. We are bearish order flow. If we look, we have this area here still marked up from last week, and that looks valid to me. Price has not come close to it yet. We have an engulfing candle, we have imbalance, so we're going to leave that alone. USD JPY on the daily. Okay, we got that choke. See how we got that first break of structure to the downside. The order flows bullish. We get that change of character, but that's not enough to give us a change of trend, right? that change of character, that's all we need on the 15-minute chart to determine our lower time frame flip entry zone. But when we're identifying the higher time frame trend on the daily chart, we need more than just this change of character. We need a choke plus. We need that second break of structure, which would occur right here after this pullback, and we didn't get that. So since we didn't get that, we are still bullish, right? However, and you can see here the price has already mitigated this area and reacted off of it, right? Came down, hit it, reacted off of it, didn't quite come back to where we wanted to take the trade. I'm not sure why we have that trade set up there though. Okay, we're using this candle right here. So we're using this order block right here, right? So when you look at that, to me, what I need to see again is this has already been hit, right? So I either need to go lower, and it looks like I already have a lower one marked up, right? So I have an alert set up lower. So what I need to do in this case is I need to set another break of structure alert up here. Because if I can get a break of structure here to the upside in this, then I will be able to identify an area down here to trade from. But I need that break of structure first to do that. Okay. And so, like I said, this area here has already been mitigated. So that's what we got in USD JPY. So there you have it, guys. We've gone through all 28 pairs in my watch list, right? We've identified the daily trend bias. In mostly all of the charts, we were able to identify a 4-hour order block to trade from. We put an alert at the 4-hour point of interest, which is just the open of the institutional candle inside of that 4-hour order block, right? We set our alert there. And on some of the pairs, we had to set break of structure alerts, right? Because we weren't able to identify an order block. We used the free indicator, the Smart Money Concepts Lux Algo, to help us identify these order blocks. And in most situations, the order blocks had to meet 3 criteria: must lead to break of structure, must have an engulfing candle, must cause imbalance, and they must not have already been mitigated or touched. Okay, so we have all of our alerts set for the week. So again, if you don't understand any of this information here, that's because you need to take my free 9-part Smart Money Concepts video series. Make sure you send me a message so you register for that, right? If you're ready to get started with our community, guys, if you're ready to get everything, get access to everything we have in our community, right? All of our training, all of our trading strategies, all of our training, all of our trading strategies, and our proprietary indicators that are only available to customers of our community. You'll get access to all that. You'll get access to all of the trading, all of the training, all of the live sessions at the company that we're with. The multiple educators do multiple live sessions daily. Our community does 5 live sessions a week, Monday through Friday, 12 p.m. Eastern time. Again, you have to be a customer of our community to get access to all of this. So if you want the link to register for that, you still have a couple days where you can save $85 until July 31st. Okay, so you can save $85 if you get started now. If you want the link to that, let me know. I will send you the link. You'll be able to join our community, get access to everything. I'll send you all the information you need to get started, where to begin. I'll send you the Google Doc. It walks you through it step by step. Tells you where to begin in our community, where to begin with the company that we're with. And you'll be able to try that all out for 7 days, guys. And if you don't like it, you can ask for your money back, right? You go to the company, as long as you're within that 7-day window, they will refund your money. But for a limited time, you can save $85 if you get started now. So make sure you get with me. Let me know if you need the link to register for my free 9-part Smart Money Concepts video series, or the link to register to join our community. and get access to everything, right? Now, also, please help me. This video is on my YouTube channel. You may be watching it somewhere else on social media, or you may be watching it in my Forex Smart Money Trading Academy group. Either way, let's please, if you got some value from the video, hit the like button, subscribe to the channel, leave a comment down below, do something to help with the YouTube algorithm here so it shows up in the searches, right? So Bill Soriano from Pittsburgh, guys. Let's make it a great week trading Forex.